Sometimes the property is not doing well because it has a branding issue. We bought an apartment building here in Dallas, and if you Googled the apartment building, I don't remember the name of it, it was called the Sunny Ridge apartment complex, and you Googled Sunny Ridge apartment complex, and the first things that come up on the first 3 pages of Google is murder at Sunny Ridge apartment building, and all these articles about somebody who killed somebody at the apartment complex. And then surprisingly, the property manager was not able to get tenants to stay at the property. It's like, well, duh, it's like anybody that looks at this property, all they hear about is people getting killed at the property. Nobody's gonna wanna stay there. So what is the first thing we do? The day you close, you own it. If a kid falls in a swimming pool and drowns 30 minutes after the closing, that's your lawsuit, that's your liability. So you have to be ready to jump in and take control day one. There's several specific steps. All of this should have been planned in advance. A lot of times we're replacing the property manager. Sometimes the property manager was not doing a good job. So we got a new one racing in to take over the property. We're gonna make repairs. We're gonna repair anything that could possibly be a safety issue. That's the first thing we're gonna do, right? Anything that could be dangerous, anything that could create liability, anything that is gonna create hazards, you go immediately fix those on day zero. You may wanna rebrand the property. Sometimes the property is not doing well because it has a branding issue. We bought an apartment building here in Dallas, and if you Googled the apartment building, I don't remember the name of it, it was called the Sunny Ridge apartment complex, and you Googled Sunny Ridge apartment complex, and the first things that come up on the first 3 pages of Google is murder at Sunny Ridge apartment building, and all these articles about somebody who killed somebody at the apartment complex. And then surprisingly, the property manager was not able to get tenants to stay at the property. It's like, well, duh, it's like anybody that looks at this property, all they hear about is people getting killed at the property. Nobody's gonna wanna stay there. So what is the first thing we do? A, we got a great deal, and B, we renamed it not the Sunny Ridge apartment complex, the Happy Times apartment complex, right? Put up new signs, new management, etc. Improve the marketing. Sometimes it's do marketing. A lot of times we get a deal because the property is not fully occupied. So we're going to immediately kick in place a marketing plan to get it fully occupied. Consider under new management if you've got branding or reputation issues. All of this was planned before you even bought the property. But on the day of the close, when you're handed the keys, you're in charge, right? You got to be ready, and your team's got to be ready to race in and take control. Asset management is really the umbrella that goes over a lot of these different activities. What is asset management? It's managing the property manager, managing the project, doing all of the things that were part of the plan to increase the income and or reduce the expenses. So you're going to increase the marketing, increase the occupancy, reduce the expenses, get rid of waste, operational overhead, increase revenue, raise rents, make renovations and raise rents, add services like premium parking, utilities, vending, whatever. This was part of the plan, and this is a longer term plan, but this was part of the plan before you even bought the property. Now that we own the property, we're executing this plan. And this is going to be a multi-year plan, right? For the however many years it takes to make all these improvements, increase income, reduce expenses, and prepare it for sale. You've got investor relations. You got a bunch of people that put their hard-earned money into your deal, and you got to maintain a relationship with them. Generally, we're collecting rents, we're paying expenses, and then we have extra money that is cash flow that gets distributed, their share. The LPs get a share of that, typically about 70% of that. Usually the distributions are made quarterly. They could be monthly, but they're generally quarterly. You always want to communicate with your investors. These investors put their hard-earned money into your deal. You want to give them regular communications, probably at least once a quarter. You send them a little report. Hey, here's what's going on with the project. Remember, you gave you a plan. Here's how the plan is moving forward. There are ad hoc issues. Sometimes there's a flood or a fire or a hurricane or ice storm or something changes the property. And if that's the case, you want to have some ad hoc communications with your investor. You're responsible for distributing the tax documents. When somebody does your income taxes, if they're invested in private equity, commercial real estate, they get a report. They're showing all their income and expenses. They need that for their taxes. And you have to issue all of your investors that report. It's called a K-1 report by March 15th. And then the last step is, of course, the exit. And the exit is whatever. Now we're going to sell it, refinance it, whatever. Sell the property and distribute the profit. Sometimes we refinance the property and just get a bigger loan and we pay the investors back, but we continue to own and operate the property. Sometimes we give the investors infinite return. They put their money in a deal. After 5 years, we refinance it. We give the people their money back, but they still have their shares in the deal, so they continue to get income from a deal. It's called getting an infinite return on your money. Get all your money back and you still get money after you get your money back. That's getting an infinite return on your money. Sometimes there's cash calls. Like what happens with a cash call? We ran out of money because something went wrong, and we have to go back to our investors and ask them to put more money into the deal. Sometimes there's a creative exit, like we're going to sell it with seller financing to a buyer or whatever. Maybe we're going to get more money than we expected, but it's going to be paid out over a longer period of time. This is a saying I like to use: go long, keep going. In my opinion, a commercial deal should never go bad, but it may go long. And what do I mean by that? The plan was to buy a property, do whatever for 5 years and sell it for a profit. But 5 years from now, I don't know what the market's really going to be. I got a guess, but I don't know for sure. And 5 years from now, who knows what the world is going to be like, right? So sometimes the world is not what we expect it to be. Well, if the plan was put together well, and you've got an apartment building and you're managing it well, you just continue to collect the rents and pay the expenses and distribute the cash flow, and you just keep going until the market gets back to where you need it to be. That's called going long. But if you put the plan together with a 5-year loan where the loan basically blows up in 5 years, and now the market's dead and we can't refinance it, we're not making enough money to pay the mortgage, that's a deal that goes bad. So in my opinion, when you're looking at a deal or structuring a deal, structure the deal such that it always can go long and it should never go bad. As soon as your deal is done, as soon as you sell the property and pay back everybody their money and their profit, your investors have a problem. What is the problem? The money is sitting in their bank account. And when the money is sitting back in their bank account, they're not making any money on that money. So you need to come up with a solution for the problem. In other words, always have the next deal ready to go. Because if somebody invests with you, right, and you make the money and you pay them back, they're going to want to do it again, right? So immediately when one deal finishes, you say, hey, you like that? I got another one over here. And another one is going to be the bigger one. So you can invite all the people that did the last deal to come into the bigger one. And in the meantime, you've been building your list of other people that you're going to invite into the bigger one. And you're going to do the whole thing all over again, but with a bigger one that makes you more money. To make more money, just do more deals or you do bigger deals. And a bigger deal is actually easier because it's the same amount of work. Always bring your past investors along for the ride. They put their money in your deal, give them first dibs on investing in the next deal. And sometimes we have a deal that is so desirable, you actually oversubscribe. You have more people that want to put their money in than you need the money, right? So you have to make kind of careful decisions. Look, I know you want to put 300,000 in this deal. I can only take 100,000. That can happen. It's called oversubscribing. I want to bring in the deal. I want to give you a piece of this thing, but I have too much subscription, too much money for the amount of money deal that I need.
Hey, Olivia, how are you today?
I am doing well. Super excited to be here in Dallas today in another workshop, teaching people how to work on the elevator pitch for them to be able to find deals and capital raising because it never gets old.
Yeah, I was awesome. Like going through some of these elevator pitches with people today, and little tweaks here and there, and it went from like messy all over the place to like smooth, clear, concise.
And now they're ready to go.
Now they're going to be raising capital.
And Mike is super excited.
And you get to do what? Fire
their boss. We're ready to fire your boss. When Mike tried to steal my code, that's what happened.
Translate.
So of course we're here rehearsing, making sure all the W2 learn all the skills that they need for them to be able to fire their boss before they get fired.
There you go. All right, guys. If you want to hear more, contact us, DM us. We're here.